The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going in Raw, we interview Litquidity, and we also talk about Hugh's $150,000 SPY put. And not only that, we also discuss how to confirm a reversal to finally conclude that segment.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, October the 17th, and we're recording this a little early, but we have a good interview with Litquidity. But before that, Hugh had a massive SPY put play. We talked about it on Wednesday. Do you kind of walk us through that real quick?
Yeah. So I think the first thing is that most of the time I scalp things. Very rarely do I have conviction when I'm trading SPY options. So when I am trading them and I do have conviction, it's one of those things where I'm purely going for bank or bankrupt. And that's what I did. And so what I've really been looking at is, and we talked about it on the last episode, is that I'm always trying to think about what the market makers are thinking, or really what everybody else is not thinking about. And with this, it always felt like the dips were being bought by retail, but then sold into. Bought by retail, sold into. And what we were seeing was a trend of the entire day would be a chop fest for SPY, and then the end of the day would be a sell off and a sell into. And so I figured that this trend would hold. And I actually even started into SPY a little early into the day on my puts. And so some of the theta chopped me up a little bit. But overall, it held the same exact trend that it's been holding. That it would be low volume, and it would be, a chop fest between, on Wednesday, it happened to be between 434 to 436. And then we saw it get hit into close. And so I always had like a rule of thumb that there's like a support, and the more times that it tests one of the ranges is usually which way it'll go, especially if it's lower volume. I'm not trying to guess the direction, but as we talked about last episode, I always like to put on a little bit of a feeler if I have a hunch. So my edge was that I kind of felt like I knew the pattern of what was going to happen, and it was following that previous pattern. So I started in number of SPY puts, and once it flushed through VWAP, tested support, came back up and failed again. And after doing so, I mean, it was a real nice trade. Not as big as Tuesday's trade as far as the percentage gains, but I mean, once it broke through that 433.85 level, I mean, there was on the 5-minute chart, it was like almost $1 a share candle, which gave a really nice pop inside the options. And so I sold most and held some over into Thursday. But pretty much I identified the pattern. I identified my edge, which was that I had known the pattern and I had known what was coming. And I had tight stop loss, but I felt like I knew the pattern, and the pattern worked inside my favor, and the thesis continued to build until the trade worked out.
Yeah, and I think it's actually super cool that we're able to, and for the listeners, I think it's super interesting that you guys may be fascinated to find out that Wednesday episode was recorded maybe 8 hours before this, and so he racked up that $100,000 over. He's probably already up 50K when we recorded that one, and he held it. And was it exactly what you said on the Wednesday? Sorry, it's like 9 p.m. It's 10 p.m. for him right now, so it's I know I swear I wasn't gonna get drunk on an episode again, but Hugh we're on a late one right now. But
I did. I did.
But was it exactly the plan you had on your that you explained on Wednesday's episode?
Yeah, exactly. So, like I said, is that I usually don't go for the big move. I usually go for the quick scalp in either direction, like kind of more of like a reactive trade. So if it gets overextended to the long side, or if it gets overextended to the short side, I usually look for a reactive trade and a quick pop into the premiums. With this, it was, hey, following this pattern, this is a perfect setup. Chop fest all day. And then it brings lower. And again, it comes back to, I always want to ask myself, what is everybody else thinking? So if everybody else is thinking, oh, okay, support is in at this 434, it's going to test 440 again and break out. That was the reason I went short on Tuesday, was because everybody was thinking that this 440 level was going to hold, or was going to break through. And when I saw a hard rejection off of that, and then it tested again and rejected. That's when I went short and knew that that we weren't there yet. And then again, same thing. It came back down to the support, and it was just sitting on the support line. Chop fest, chop fest, chop fest. And I had this, the same thing that it would do what it couldn't. The pattern would continue to hold, and the trend would continue to hold, and it would sell off into close. And I was getting chopped up by the premiums for a good hour or two, and then the last 15 minutes just came in there, and I got a good swipe down. So.
And I guess to finally conclude this a little bit, how much did you put in to get $150,000 or what was it exactly? And how much did you put in?
So Tuesday's day was 102,000, and I'd put in 60,000. At one point they were up like 170%, but I didn't take profits and the premiums got chopped. But yeah. So
are these two separates, or are these the same ones?
Yeah. So they were same concept, same trade. Basically, just I'd moved back one expiration because of the time decay, and then Wednesdays was to make 130. I'd put in like around 90. Something like that. So, like I said, is that I was expecting a bigger flush. I was hoping to make between 200 to 300% on the SPY options, but that flush just didn't come all the way. It did flush and it did give a really good return, and it gave about 100%. But that's one of those times.
It just always seemed like the bulls were kind of trying to make it go back up every time.
And that's what I mean is that, even though I'm playing with bigger money, I had a tight stop. So the second that it went against me, I would have been out. But
was there ever a time it was close to your stop that you were worried about it?
Yeah. No, it came really close, but that's when you can't be using these bigger time frames. Sorry, that's the exact opposite of what I wanted to say. You can't be using these smaller time frames, because when you use the smaller time frames, it could actually go through resistance. And you get stopped out, and then 2 minutes later be back down, or maybe even dump off of that. So that's why I love to use the 5, the 15 minute, the 4 hour, just because it gives that broader timeline, and it gives that, it gives me that little bit of conviction, because actually now that I'm looking at it on that trade on Wednesday, my stop loss was around 436, and it had actually gone, SPY hit 436.07. That doesn't sound like a big thing, but let's just say that I had that strict stop loss on the 1 minute chart, I would have been out. And then even 5 minutes later, it hit 436.03. So both of those times I would have been stopped out. If I had done that, I would have taken like a 30% hit.
Just for two quick clarifications. So you post your option stop losses based on the stock, not the options prices, correct?
Yeah. So I trade everything based on the underlying equity.
Right. And the other question I forgot.
Yeah. I think what you meant was like, was it coming close? And it was coming close. Like, but that would have been a 30% hit. But because I used the 5-minute chart, because I used the 5-minute chart, I was able to have conviction. And in fact,
because sometimes if it gets close to support, like the options traders will be like, oh, it feels like it's going to break and we're going to sell through. And that's like a totally different environment you have to understand when you're trading options with those.
Yeah, exactly. And so, actually, I mean, I wasn't at the desk when it failed this 436 area, but that's where I would have actually probably doubled up. And so when I have this tight stop, high conviction trades, that's when I can scale in, because I'm looking for a bigger move. Like I'm not taking 200,000 in premium to scalp it for 10%. I'm looking for this 200-300% move. And like I said, is that this had held the same thing. So again, 12 o'clock, it hit that high of 436.
When you say you're looking for that much of a move and you're still putting in 60,000, when you say 60,000 to you, is it something to you that if it went to zero, it wouldn't matter? Or is that 60,000 something like, I know you mentioned your stop loss, but like how ties it on a $60,000 position for you?
Yeah, I mean, if I had gotten stopped out, I think it would have been like a 35% loss up there. And again, it comes down to that underlying equity. But yeah, I mean, it could potentially. Let's just say that, for instance, if we had gone all the way through the day, and I had gotten stopped out at like the top, so I had gotten chopped up all day and then it gotten up there. I mean, it probably would have been closer to like a 70% loss. So like I said, is that it comes down to, it's definitely bank or bankrupt for me, but it's one of those, it's not something that I do every day. In fact, it's not something that I do every week. In fact, it's not something that I do every month. So when I do identify this pattern and I do identify that this is a potential trade, it takes me a day or two to really, like, all I do is watch SPY. And when I see the trade, I mean, I hit it, and I hit it hard because it's a trade that I have high probability with. One, that I know that I can control my emotions on. And two, again, it comes down to I'm not over risking.
All right, that should conclude Hugh's segment on his short. He will provide us with more details about his buys and sells on his Twitter if you're interested. And now we have a very special guest, Litquidity. And we have on Litquidity Capital. You know them, you love them. It's time to find out about them. Thanks for joining us, man.
Thanks for having me.
So I guess we all kind of get this started with, I usually give an introduction, but you were a little bit of a wild card for me. Would you kind of give your introduction of, what it is you do, and aside from just have a verified meme account, which was impressive in its own right?
Yeah, sure. So I'm Litquidity. I go by this identity online. I started the account about 4.5 years ago. I had been working in investment banking, in like the traditional coverage group, which covering stuff like M&A, IPOs, debt raises, et cetera, for corporate clients and financial sponsors. And then went on to private equity, where I kind of really was able to focus more time on that because I wasn't getting crushed as a junior analyst at a bank as much anymore, and grew it from there for a couple years, and then towards the start of the pandemic, growth really accelerated, and was still working full time, but all of the stuff with liquidity was growing, and I got to the point where it was like working 2 full-time jobs, even though working in finance is already like working 2 full-time jobs. So you can call this kind of like 3. So I made the decision to launch liquidity into a more full-time thing and get into other things I really wanted to do with the brand. And so, here we are today. I've anonymity was sort of critical in order to not get fired. On the job, people wouldn't want me roasting the banks or hedge funds or whatever, being, on the inside. But now, I kind of like it. It's a little mystery for people to try to find out who it is.
Yeah, definitely. Before you quit, was Litquidity making any revenue or really any profit?
Yeah. That was something that I was also trying to figure out. Just when working at a bank or a fund, they want to know what kind of outside business interests you have. And so I was obviously not going to put an anonymous meme account as an outside business interest, but there were things like the Instagram swipe up ad revenue or some merch that I was selling on the side, but it's not like it was structured as a business or anything like that. But there was definitely some revenue coming in. And over the course of the pandemic last year, with a lot of stuff happening online, with e-commerce sales and everyone just looking for something funny just to get through a tough time, that's when things started to accelerate. And I just said, hey, like, I have all these ideas that I want to execute upon, but I can't because I have this full-time job lingering over my head. So yeah, now I kind of have more of the freedom to go after it and really build something big.
Whenever I started making, I guess, funny finance content like 2 years ago, like the end of 2019, it seemed just like a blank space where it's just free real estate almost. You started it almost 3 years before that. How did you get the idea, like, hey, this is something that's so like in this niche environment, and were you just like, I'm gonna just do this for me and my friends and we'll find it funny, and it just blew up? Or did you think, hey, I'm sure there's some other investment bankers that have somewhat of a sense of humor?
Yeah, it was a little bit of both. Back in the day in college, I really was a big fan of Total Frat Move. I think that was just when it was in its peak. The founders were just like really running shit, and I loved the whole satire of that, making fun of guys with pink pop collar polos and Sperry's. And
in high school, people where I went, they admired TFM. They thought it was serious.
Yeah, no. There's a lot of parallels with that, but that's kind of where I got the idea of wanting to do something similar. After I interned at an investment bank my junior year of college, and I was like, oh, like there's a lot of similarities as like being an intern or first year analyst, like to being a pledge in a fraternity. So I didn't really focus on that after graduation. I kind of wanted to live it a little bit. And I also didn't have much spare time with how many hours I was working. But, that's when I moved over to private equity after, where I started reflecting on that. And one day I was like, drunk with my friends. We were about to go out. We were pre-gaming, and I was like, you know what? Remember that idea I had in college? Like, might as well just start an Instagram account, just like start shit posting and go from there. And around the time, there was an Instagram account also called EBIT Dad that was just like getting me through the work days. And I thought it was funny. It was like something so niche that he's like talking about like LBOs and shit like that I'd never seen in other meme accounts, like like a fuck Jerry or a shithead Steve or whatever. And sorry for all the cursing, but those are the names of the meme accounts. And so like they seem pretty generic. And yeah, I really like that kind of like only a certain amount of people get the jokes.
Yeah. Was it in that drunken night that you came up with the name Litquidity, or was that just how did that come about?
Yeah, so it was actually the morning after. I was hungover, And I looked at my phone after like maybe 11 a.m. or something to some text messages of like, hey, we got brunch at 1 p.m. I was like, oh shit. Well, then I went on Instagram. I'm like, oh wait, I made this account. Kind of forgot about that. So then I started thinking about like, when you're making that new account, it's like choose a name, put an email and whatever. And so I was just thinking of like something that can relate to finance in a subtle way. And I went through a couple names. Some of them were just pretty bad. But the only one I do remember that I was going to settle on was like, I don't know, something like Merger Arb, which I thought was like kind of, this guy will know what he's talking about, but it didn't sound funny. And then it just like came to me like, liquidity, and then put a little T in there and like liquidity. I just knew, like, I just cracked a smile. I picked it, and that's how it was born. Went to brunch after that. Told my friends I made the name, and I posted my first ever meme, which was a picture of a dog that had a for sale sign on it, and the caption was like in that thick impact font, just saying. I forget what exactly it said, but it was something like lower middle market, banks selling a company, and they're selling a dog. So
when you and your friends go out now, is that like their pickup line? Like they helped you start liquidity, or do you tell them to keep it pretty hush hush?
I don't think you know what the definition of anonymous meme account is.
Oh, dude, are you kidding me? Dude, you used to post my gains on Snapchat.
Yeah, someone's got to brag.
Yeah, I mean, my friends are pretty good about it. They say, "Oh, I know who started it," or
okay.
I mean, but the thing is, like, once you get a lot of drinks deep, it's kind of hard to make sure everyone's in check, including myself.
Yeah.
So that's where things can get funny. But
sometimes you got to flex that blue check mark, man. I'm not going to say I don't do it every time I'm in line at a restaurant.
Yeah. It's funny though, on like having the check mark on Twitter, because I started using that, seriously, like late 2019, I think. But Instagram's like where I made my following, and that's where I have like my largest audience. And then I kind of felt backstabbed when they're like, you don't qualify for it or whatever. And then Twitter's like, oh, here you go. And so now Twitter's gained a special place in my heart.
It's messed up, man. They say we need more press. I'm like, we've been in the New York Times. What more press do you want?
Yeah.
I want a Vice documentary about us.
Yeah, when Instagram went down a couple days ago, I was like, oh no,
if you gave me a blue check mark, maybe I'd...
Yeah.
So obviously the big surge of retail traders, kind of due to the lockdown and quarantine and everything, helped your growth as a social media guy. I don't know if you trade much, but what do you think of their effect on the market as a whole now and maybe going forward?
Yeah, I will say, that's something that's definitely expanded the total audience size for this type of content. I'll say, like, my content never really has been geared towards like retail jokes, about stocks or whatever. But over the course of the pandemic, with everyone kind of being locked up at home, there was less about joking, of like office banter or taking pictures of like Brad and Chad wearing their Patagonia vests in Midtown. And so, yeah, I mean, like, the natural thing was just to talk about like the crazy shit that was happening in the market. With all of the stimulus dollars, just like that crash in the March, April last year, and then the rebound since, and like, it was just something like I captured it at that moment and just realized that there are a lot of more people now who are interested in this and looking for information and entertainment. So I think that's just been great to embrace. And then to your question on what their impact will be in the market, I think it's just really a new dynamic that can't be ignored. where people are realizing the power that they have in scale, in unison. Being able to chat about stocks on social media, on Discord, you name it, and they can organize like the same way like a pooled capital a hedge fund can deploy on something like a ton of apes or whatever can go all in into one stock and really drive the price the same way activist investor or a hedge fund can do as like one big buy. So as people start to realize what they can do, there's the strategies and ways the market will operate are just going to change, I think, going forward. And there's a lot of new technology being built around that with social apps and the tools to help traders communicate with each other, share ideas, etc. And so I think it's only going to become more pronounced.
So Lit, it's been out there that you do a little bit of your own VC investments. Do you want to talk about that?
Yeah, sure.
So first off, how many different investments? Is it all one sector? And why? Was this like a friends and family? Was this like an open fund? Like what was it?
Yeah, good question. I have started to dip my toes into doing more of these private deals. The nature of it has been through a lot of brands and sponsors that have come to me and realized, hey, like you have an audience that we want to tap into. There are target customer base, and instead of paying one-off for ads or something like that, why don't we give you equity or something like that. So like the first couple deals were sort of equity in exchange for marketing. But I'll keep those companies hush hush right now because they're in the process of raising real institutional capital, and so you'll see one of those press releases or something on TechCrunch hopefully in the coming months. But since then, I'm like, okay, like this is pretty cool. I think I can now start to do my own investing and turn the liquidity capital name to literally liquidity capital. And so I've started to make it more aware that I'm investing in certain companies and sectors where I think I can provide value, and that those sectors tend to be either like in fintech, direct to consumer brands, software that's helping the workplace environment, creator economy tools, etc. And so each of those sectors where I think either having social media knowledge or just a deep understanding of how things operate in the traditional institutional space and like tools that will help make it even better. I think I have an angle that can be helpful. And then, marketing as well is something that I can provide.
That's awesome.
So you kind of answered this with that last question, but I mean, you'll say you're in like business meet whenever we're like scheduling or like, hey, I have a call in or I have this to do. And if you're a full-time meme account, I was kind of wondering, what is your day involve as like, so like, I guess it's you, fuck Jerry, and like you were talking about all those accounts. So I thought you just woke up, posted a meme, tweeted rise and grind, and went back to bed.
I mean, some days are like that when I clear the schedule or I went out the night before. I'm just way too hungover. But here, so many people say, it really depends on the day. So there's no typical day. But if I were to try to give a routine, I mean, yeah, there'd be sort of waking up before the market opens, checking my phone, checking emails, and then seeing, okay, like what's going on? Like, is there anything funny or interesting that's like broken, news wise, and start riffing on that, start making some jokes. But it's not like I spend all day just, shit posting on Twitter or Instagram. there's actual work that has to be done, either diligencing new deals that come over emails or the DMs, that the companies are looking for capital, to writing the newsletter, or just writing the memes, and then just thinking broader vision, other things that I'm planning on doing with the brand itself. So there's a lot more than just making memes, but I'm glad it just, people can see the meme side of things, but everything else is kind of, hush hush until it's released in the public and everyone's like, oh shit, where'd this come from?
You touched on it, but your newsletter is massive, right?
I'm kind of hush hush about the numbers too. I want to reach a milestone that I think I'll reach by the end of this year. To sort of then say, hey, like, this isn't some random newsletter with 1 or 2,000 subs. Like, this is the real deal. And so I mean, look, I don't
so we can't get the numbers, but 1 or 2,000 is peanuts, is what you're saying.
That's correct.
All right.
Well, but that's not to talk lowly of people with 1 or 2,000, but I mean, just to give it a sense of scale, that's kind of well past it, and where I'm trying to get into the millions eventually, and I think there's a clear path to do it.
So for those listening that haven't subscribed to it, what exactly does your newsletter entail, and how can they get into it?
So the newsletter is called Exec Sum. It is, as the name suggests, an executive summary that's put out every Monday through Friday, that details the stock market, the deal flow that happens every day. So that's being, any big M&A deals that were announced, any venture capital fundraisings, IPOs, SPACs, you name it, just like a pretty brief summary of what went down, and then sprinkle in some memes and just keep it fresh and entertaining. And, it's like a 5-minute read, I would hope, for people with a normal reading pace. But if you want to sign up, it's execsum.co, .co, and it's free. So that's a short little pitch, but I think it's been helpful so far for a lot of people who it's great to get DMs or emails saying, hey, like, just wanted to thank you for the information you're putting out. We spoke about exec sum deals that I read about in my final round interview at Goldman Sachs or JP Morgan or something like that. And, I got an offer through that. So I'm like, oh shit, like, that's the best selling point, to convince people to sign up, because it's real information. It's stuff that, I wish I had as a junior banker, or, just looking for something. I mean, obviously there are other newsletters that are out there, but they weren't tailored specifically to someone in my shoes. And so I said, there isn't something like that, why don't I do it myself?
Yeah, I remember those interviews. Those interviews were tough, and everybody's the same, because you went to college, you were inside the investment banking competition, or you were inside the investment club. You did your internship junior year, B of A or whatever, and so no, that's really cool. That's awesome.
Yeah, and so I mean, it's exactly I went through it. Everyone goes through it, and people are always trying to scrap together a sort of list on how to approach them. And one question that people always ask is, tell me about a deal that you're following in the market, or can you tell me where you think the market's going, or what's going on right now? So, it's stuff that you get asked in an interview, but you will also be asked by a client or your boss if you're just like trying to talk about something or a trend, or even on the investing side, like, just being up to speed is something that, you can do very quickly, but some don't develop the habit.
So before this interview, you mentioned that you may have some questions for us, and I think it's an interesting topic, Salo, because you're like an OG of the finance social media side, and I feel like we've at least made some sort of ground on the finance Twitter side. Now that you're in, it's kind of like you've seen both sides. So I guess before we even if you have any, but before that, what have you kind of noticed as the difference in like the Twitter side of it, the Instagram side of it, and all the others? Because I mean, you've really have been in all different parts of it.
Yeah, that's something I've definitely seen, and just tailored the content to the different platforms. Some things tend to hit different on Instagram, and they won't do anything on Twitter, and then vice versa. I think with Twitter, what's really interesting is how you can communicate with so many different groups of people. When you think about like what FinTwit is, it's such a vast category that can be people who are in investment banking. It could just be people who are more on the trading side of things. I'll lump VC Twitter into that. Crypto Twitter is its own different thing, and it's just like
NFT Twitter as well. Man.
Yeah.
Let's not
Yeah. That's something we can get into later, because NFTs are wild. But yeah, exactly. Like all of them, I think, could easily like be bucketed under FinTwit. Asset management, real estate, whatever you want to call it, energy, but everyone kind of interacts broadly. But then there's some, if you want to specifically talk about your own domain expertise, you can do that, and everyone can just chime in. And it's not all about like, metric based posts that rack up a ton of likes or retweets. You can just be having a conversation, and then butt in there and then chime in or troll someone if you so wish. But Instagram is a little different from that regard. So I definitely see that difference. And then that's kind of how I learned about you guys, and that's where I believe you guys have your biggest following. Is that correct?
Yeah. Until you start pumping our Instagrams on yours, man. We'll figure something out afterwards. We'll set up that payment plan. No, we gotta bring it to Facebook so the middle-aged moms will know the deal, and maybe LinkedIn. I don't have a LinkedIn, and we've got other little kids giving out bad advice on TikTok. So I mean, we're already set there.
Yeah, I mean, there's so many different platforms that I'd love to be in, and I'm sure you guys as well. But you kind of realize like you maybe can't be in all of them, or you don't want to be in all of them. And I mean, I think TikTok, for example, is filled with like those cringe videos.
So cringe.
Yeah, and like people who try to give advice and it's really bad, or they're just hyping up something with like no understanding of what it is. But I'm sure like there's a way to actually make it entertaining and insightful. But and there are a couple that I do respect.
I just feel like in a one minute video, how are you going to tell someone why this is a good investment?
Yeah, exactly. It's I just that's kind of why I haven't dedicated too much time to TikTok, and I'm not going to be dancing or showing my face either. So
also, it takes so much damn time. I mean, we even tried to do a video, and it was taking so much time.
We've had like so many interns just go and try, and then it's like they just stopped. And I was like, what the hell? We had one do well.
Right. Yeah. The one where it was
our very first one got like 60,000. I was like, dude, have you been posting TikToks? He's like, no. He's like, 1 sec, let me log in. That had 60,000 views. I was like, damn, we're banging. I'm viral, mom.
But that was the one where like the Manziel options. It was like $700 into $37K.
Yeah.
In lotto options. But then we post something like why everybody should have like a Roth IRA. It's like 1,000 views, like something like. But lotto options, man, blows TikTok up. No,
That's so funny. Yeah, I mean, it's always that where the low value content tends to rack up the likes, and then the real shit that people should be interested in is it just kind of falls flat.
You can't get anything. Yeah, exactly.
Yeah, and I saw this tweet today that was just from like right after the AMC GameStop fiasco. Someone was like, "Hey, next time we're about to make a shit ton of money really easily, can someone text me?" I was like, "So we've been doing the whole like coronavirus thing. Everything was running."
Is there beef on kind of between the meme accounts, or do you guys all kind of interact behind the scenes a little bit? Because I think that's something like we've always wondered, or at least I always wondered.
That's a funny question because there is some beef because there are people that try to act more elitist, or they just do something or accuse you of stealing their content or something like that. And I won't say that I'm innocent in all that stuff, but I like to think that I only do that if someone is, willingly either trying to smear my name or accuse me of, stealing an idea, even though like I've made it aware like as many times as possible that I have no reason to steal someone's content. And like, hey, someone might have thought of like a basic caption and like, oh, do you think like I scroll through like Twitter and Instagram and like stay on top of like the 50 or 100 meme accounts every second of every day and keep tabs on like, if they put, when stocks go down or some shit like that. And, oh, this is like kind of similar. It's like, no, like, some people are inevitably going to do something that kind of sounds similar, but you can kind of see when there's patterns of like, all right, there's like 5 in a row that are literally like posted, 2 hours after I posted them, and there's something there. So then that's when I'll call them out, and then that's where there's a little, beef or whatever. But I mean, I'll say like for the most part, like a lot of people just just shoot the shit in the DMs and whatnot. I haven't really met others in person. Others have, and they like are friends in real life, but I don't really want to do that. I don't seek meeting other memers in real life. I kind of just say, hey, like you're pretty cool online. Like let's just keep it that way. But yeah, I mean, there's a couple. I don't know if you want to get into it, but people who just like continuously just like shit talk me or call me like a far right, like
piece of shit.
Yeah, a piece of shit. Fucking like. Smearing everything and just like, I don't know, racist, whatever. I'm like, okay, like slow down. You guys are really just like, throwing shit out there. And so I'll troll them back because like, it's funny. It's like people really get riled up. And so like, I'll troll them back. But then they start to turn around with like, they think, oh, like Litquidity is responding. That must mean he's triggered back because he's defending himself. I'm like, no, dude, I'm trolling you back. Like I'm sitting in an airport lounge, like, drinking beer and just like shit posting and seeing this guy get mad and then, like set them off. And then they'll just bring in their friends and start to say, bro, like you're so triggered. Can't believe you do thin skin. And I'm just there like getting drunk, like just laughing my ass off. So
like I won't have internet access in 30 minutes, man.
Yeah, exactly. And so, yeah, I have a funny screenshot of a tweet that was deleted that there was some guy who's like, dude, you're a terminally online virgin who doesn't clap cheeks. Who even says that? Good luck, like ever raising a fund off a meme account. And then like a week later, I announced, that I was involved in the seed round of Payload Space, which was led by the Winklevoss twins. And, I was alongside that in the press release. So it's one of his friends tagged him. And he's like, oh, good shit, man. Well, congrats. I'm like, yeah, fuck you.
Yeah, it's always like they're fucking assholes. And then you respond and they're like, yeah, I read this shit. Like,
yeah, exactly. So, again, I mean, it goes back to that question of like, what do I do every day? And this
respond
guy's
to
like,
haters.
yeah, well, they're like, oh, you're probably like just tweeting all day. I'm like, first off, what's so bad about, fucking tweeting all day? That sounds pretty sick to me. Second of all, there's actually a lot more than that, but, I'd rather have them believe that I'm just tweeting all day in my underwear, in Manhattan and whatever. And then so I'll be doing real shit. And when something like this gets announced, that's one of those boom, laid my balls on the table.
Hell yeah. Nah, I mean, I think there's no other way to put that. But so I think we can kind of end this with what do you think you have as advice for a lot of these newer traders? I think that's kind of the bigger goal of our podcast, is always to help them out. So I think, you see them, so many of them do dumb things, and you see every 1 in a million do really well. So to the other 999,000, what do you think, advice for those guys?
And then just to follow that up, the other route after that, go with your advice to, like a sophomore in college trying to get into IB.
Yep. Yeah, sure. So I'll handle that in two parts. So the first one, and just like traders who are, opening up their first account, a personal, trading account on either Robinhood or Fidelity or whatever brokerage that they do it on. I think it's trying to find real educational tools or resources that let them learn more about what they're actually getting themselves into, and how to think about getting into an asset like traditional stocks or REITs or crypto, or you name it. I think just a lot of people right now are treating it as a casino, even though some people, in Congress or whatever, don't think the market is a casino. I think with all these new millions of people that are just going and getting their advice on like TikTok of like, dude, Dogecoin's going to pump up and whatever, and they just buy it, but they have no reason why. It's like, that's not sustainable. Like, they will end up losing money in the long run if they just try to follow, one of these pump and dump type schemes. So I think, yeah, it's like building a foundation of knowledge around like, okay, like what really is a company that I want to own? Like, do I believe in it? And what's my strategy? Like, am I going to try to trade, or I'm just going to build a portfolio and hold for the long term? So, I mean, there's a lot there, and yeah, I mean, there's a lot of free resources online. And so I'd like to say, mine is a pretty basic one. I don't really offer investment advice on exact sum, but yeah, just being plugged into FinTwit, YouTube channels, etc. Like people can kind of go there. And then on the other part of the question on like call it a sophomore who's trying to break in to IB, I would definitely say like the most important thing is to really network and get yourself known, by a lot of people who are in the industry. So like, or it's easier for someone who goes to a school that sends people to Wall Street pretty regularly. So it's reaching out to alumni and networking and saying, hey, I have an interest in this, and trying to have something. It's either I see you played tennis or golf or basketball or whatever, or you were in this club, and just like trying to stand out as like an individual, not just like a resume that's hitting an inbox where tens of thousands of other people are doing the same, and you just get weeded out based on your GPA or your major or something like that. And then on top of that, I would say, yeah, like you got to be on top of your shit too, which is the technical stuff. You're going to be going up against people who live and breathe, DCFs and comparable analysis, like ways that people can value a business. And you just got to know those questions that are inevitably going to be asked in an interview that weeds out people who are on top of their game and people who are just like, hey, I'm applying because everyone else is. So those are the two kind of biggest things. when thinking about applying to investment banking and wanting to break in.
So that's the best way to break in, and the best way to like get out of investment banking is to start a meme account.
I mean, that is a pretty good exit op that is, I'd say, not a path well worn out like investment bankers who go to business school or private equity or something. So, I'm trying to pave that path of go to college, go to investment banking, and then launch a meme account. So that would be pretty fucking sick. So you can skip, paying for Harvard Business School or something when you can just be shit posting on Twitter and
stealing other people's memes. All right.
Exactly.
Awesome.
All right, man. Well, it's been a blast, and we'll, hopefully we're gonna talk again in the future, as long as people like it. But if they hate it, obviously we're not gonna have you back.
Let me know.
Yeah, I mean, if you don't ever hear from me again, just assume it sucked. But no, seriously, thanks so much for coming on, and your memes and shit. I do enjoy your shit posting, so make sure to keep that up.
Yeah, really appreciate it. And thanks for having me on.
Thanks,
All right. Take care.
All right, see ya.
And now let's discuss identifying a reversal.
Yeah. So I like to keep, I'm not a huge technical analysis guy, but so I like to keep things really simple. And that's just the way that I like to do it. You can totally get way more involved and you can totally do way more than what I do. But this is just what I found works for me. And what that is that I like to find charts that are inside a steep downtrend. So they're holding this range of a downtrend for, anywhere 3 months plus. That's really what I want to see. Or what I want to see is that I want to see a chart that, let's take this BCTX, for example. BCTX, we're recording this on October 12th. The Wednesday or Tuesday, October 12th. And so BCTX on the 20-day 1 hour, you can see that, that $7 mark was that support mark. I mean, it's been the support mark for the entire month. And you can see that it created like higher lows all the way up to that 950 level. And then it rejected that 950 level like 3 or 4 times and then broke down and came all the way back down to the 7 level. It sat at the 7 level for almost a week and a half. And then today, this Tuesday, it went nuts, going up 15% and is testing that 850 resistance again. So that's a perfect example of, okay, it was that support, came up to resistance, now it's creating this range. Now if it breaks over that 850 now becomes the new support. So now it becomes kind of like a stair step. Okay. And then next it would be 950. And then if you get over 950 and 10, now it's like clear skies and all the moving averages are caught up. And that's like the most beautiful chart that, in my opinion, that you can get. And inside my experience, those are the kind of charts that I like to trade. Now, if I'm getting into a swing, so I'm already obviously inside BCTX, but if I'm just getting into a swing, then what I'll like is I'll like a really big downtrend. And things that you want to see is that I would like to see consistent volume on the downtrend and then volume dry up. Then I would like to see a big volume bar on the daily chart, but not much movement inside the price. And why I say that is that because that can be a reversal candle. If it's kind of like a shooting star, that can be a reversing candle. Okay. And then next, I would kind of like to see that be the pivot point and start to break out over that downtrend resistance line. And the other thing is that I would like it to be trading underneath the 50-day moving average, but I don't necessarily want it to be trading underneath the 200-day moving average. I wouldn't mind a chart where it's underneath the 50-day, but it's above the 200-day, because the 200-day would then be the next spot that I would suspect should hold as a support. And that would probably be one of my ad spots if it decides to hold there. So like I said, is that big downtrend trading in between the 50 and above the 200. And I want to see really big volume bar as kind of like the reversal pivot day, let's call it. And then I want to start to see it break out above that downtrend. The perfect example, I think we used it a few weeks ago, was Any back in what was it, in June, I believe it was. Yeah, it was back in June or July. It got all the way down to 120, and then it had broken out over that 150 mark, and from there it's just been on a tear, hitting 1198. Right now it's sitting at 7. Go back to that one and check that one out, because that was one where it broken that downward trend and has just created a beautiful chart, holding support, creating stair steps. It's a beautiful thing. It's really a beautiful thing to watch, and so that's one that I really like. And like I said, is that it's going to be what works best for you, and you're going to have to find out what works best for you. I know friends who will never touch a downtrend, and I'm not going to touch a downtrend, but it's definitely something that comes on my radar when I see it inside a downtrend. And then the other thing is that intraday, how you can see reversal is something similar. Is that seeing those big volume bars come up out of something that has gotten smoked recently. Like I said, is that something that's gotten, let's just say that it went up 200%, came down, and then you see those big volume bars. That's definitely something that can be noted. And then when it starts to confirm back up, breaks the downtrend intraday. That's something where you can usually get a nice volume pop, especially if you know that shorts are loaded in there. That's really important as well, because sometimes inside the swings, the longer swings, you won't see that big pop because it's just a lot of selling. But intraday, if you can see like a downtrend break on something that is news, that can give a really nice pop from shorts covering.
All right. And just as a little guest appearance, I did just have a trader come get his dog's leash from here. And another really good trader, his name's Lolo Jorts. Do you want to give your opinion on how to identify a stock? Tell his dog, shut the fuck up. Good dog. I know people love dogs. How to identify when a stock is about to reverse and how it's, guaranteed a reversal and you're not just guessing at the end of a downtrend. Give me a little 1 minute.
Yeah. So main thing I'm looking for when I'm looking for a stock coming out of a downtrend is kind of the increasing volume into the lower price, as well as just that price starting to increase with the volume increasing as well. That really adds to it. And when you look at the longer term charts, as far as the dailies, the weeklies, the hourlies, as those start to reverse and confirm higher closes, a lot of times people look at the 1 minute, 5 minute, all the shorter term stuff. But when you really zoom out and look at the 1 hour to daily to weekly charts, it can really give you some key levels and how to really confirm those reversals as far as when the volume and price action really starts to increase and keep that uptrend going.
All right, hell yeah! I think that's some pretty good stuff. And if y'all like that, and if y'all want some more Lulu Jorts action, let us know in the replies, and I'll make sure he's he lives in the apartment with me, so not in the same one. Don't worry, we're not. He lives upstairs, but yeah, we'll get him in. But yeah, guys, I hope you all like this episode, and we'll see you all next time. I'm getting a call from Concierge right now, so rate us all 5 stars, and we love you all so much. Goodbye.